Alright everybody, welcome back. Today is April 11th, 2018. It is Wednesday, around just after market close. My name is Nathan Oliphant, and this is the gluten-free Jason
The
Besson.
gluten-free
And
Jason Besson.
welcome again to Rebel Trading Group Podcast, Episode 9. How are we doing today, Jason?
Honestly, Nate, I'm doing pretty shittily. I've been a little under the weather the past couple days.
Yeah, it'll buff out.
Yeah, it'll buff out. I feel like shit, but took the day off, calm down and everything, and get back up on the horse tomorrow. Take some Dayquil and get over it, right? That's what we do. Yeah, we got to grind it out, man.
That's how you make money. You can't make money by being sick.
But I'm here. I'm ready for a podcast, and we had a little bit of a boring day today. I would say it was a boring day. Dow losing 218, SPY losing 14.5, the NASDAQ losing about 25 points, and Bitcoin sitting at 6901.
Hasn't moved much. Bitcoin hasn't moved much.
Literally since we have started this podcast, she hasn't done shit.
Well, she was at like 77 for a while.
She went to 67 and keeps hanging out around 7,000 right now. But yeah, so that's what pretty sideways day, really. I mean, the Dow losing 218, that's nothing. Call me when it's 5+. Yeah, just kind of sideways. We opened up. We had a nice little spike all across all of the indexes.
I thought we were going to the moon today, midday.
Yeah, I thought we were ready to bring it back, and then she lost it all and then some in the middle of the day. So, nothing much exciting, man. Nothing going. Another smooth, volatile day.
You know what time it is?
No.
It's Market News with Nate.
Market News with Nate. We need a little sound effect for that. That's Justin. You need like a 1950s newscaster. That's Justin coming in from Moscow. The Kremlin watches in and blocks blah 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 blah. You have to smoke a cigarette and wear a bow tie while you're doing it too.
We'll get it.
Anyway, go on.
All right, so a couple things that I need to point out. As we may know, Mark Zuck is on Capitol Hill. Yesterday he was in front of the Senate committees, and today he's in front of the House committees. Zuckerberg's doing well in front of. He knows what he's talking about. Facebook has been up 5% since he's been on Capitol Hill, so he's doing something right. Talking to Congress, he's saying the right things apparently. So go Marky Z, you're winning in that book. There's big talks about, are you gonna make Facebook a paid subscription? And if that does happen, that's okay. Facebook will still have that free option, I believe. I believe I was hearing someone say like Hulu has that option. You pay $2 more, and you get to get no ads.
More commercials. Yeah,
and only 10% of their users do that. So I mean, there will be. Go ahead.
I'm sorry. Does the Facebook login page? I remember when I first signed up. I remember it specifically said under the thing. It says it's free and always will be. Period.
I don't know.
Do you remember that? That?
I don't remember that.
I swear to God, Facebook used to say that it's free and always will be.
I'm sure it's always going to be free. It has that
keep
option.
Going on. See if I can pull that up here.
Okay.
Keep going.
The next thing we have
Trump
on Twitter. Let me read this out loud. He says, 10 hours ago, Donald J. Trump, at Real Donald Trump on Twitter, Russia vows to shoot down any and all missiles fired at Syria. As you may know, Syria did another gas attack on their citizens, killing over 500 people, I think, something like that. Excuse me. And he says, he tweets out, Russia vows to shoot down any and all missiles fired at Syria. Get ready, Russia, because they will be coming. Nice and new. And in quotations, smart. You shouldn't be partners with gas-killing animals who kills his people and enjoys it. End tweet. So I feel that kind of shook the market a bit today. 200 points is significant. I feel like it is kind of significant. It's almost 1% on the Dow.
How did defense stocks react to this?
Let's check. BA. Boeing Airlines. Is that what I'm looking at?
What's the defense sector? Defense sector. What is the ticker? I'm looking it up. I got E-Trade. Hold on.
ITA.
Yeah, go with that one. I want to say there's an XL in there, but yeah, go for it.
That's the iShares U.S. Aerospace and Defense ETF (ITA). It was up 14 cents at 0.07, so it's kind of flat with the rest of the market. Anyways, moving on.
So not much reaction to that. Surprised.
Well, a little bit of reaction. A lot of people get scared when there's like thoughts of war going on in the market.
Oh, yeah, you're right. There's instant sell-off. It's not always where can I profit. It's, oh my God, let's just get our money out. Yeah. Let's take what we have and run, rather than, okay, well, where can I be greedy next? Yeah. I guess it's a smart way of looking at it. So.
Yeah. But okay, so some good news out of Donald Trump's Twitter. Where is he? Oh, he tweeted out, I think it was either today or yesterday, about him in China. He says, tweeting, very, very thankful for President Xi. I think that's how you say it. Xi, Xi?
Yeah, I think it's like Xi.
Yeah, Xi. Excuse me, I'm sorry if I offend anybody. Very thankful for President Xi of China's kind words on tariffs and automobile barriers. Also, his enlightenment on intellectual property and technology transfers. We will make great progress together. So that kind of eases things up on trade wars with China. I think that's really good for us.
Mm-hmm.
What do you
think? Definitely calms things down, and it wants to put those sideliners. Remember, those market movers, they're moving millions, if not billions, at a time. So when they hear good news and they're ready to put that money to work, that's going to push the market up. And I think that's what we saw at the morning today, because there was some good that news came out kind of earlier this morning. And that's probably what pushed us up. There was some heavy buying from the institutions. And, of course, I think the flip coin, the ones that stayed in, saw a lot of opportunity. And we're like, oh, we'll use this to get out. And that's kind of what kept us down. But, we did put in a bottom towards the end of the day and kind of leveled out. So tomorrow will be interesting.
In other news, we have, I'm pretty sure the Fed minutes came out today. This is reading from CNBC. This is the headline. Fed minutes, all members see higher GDP and inflation and more rate hikes. Of course, with inflation comes more rate hikes. We need to keep inflation down with rate hikes. So higher GDP and inflation means people are spending and making money. So that's sort of a good way to look at this. So, yeah, of course, and more rate hikes kind of reflect banks. So with a ticker symbol for the financial sector is XLF. Think about that maybe.
XLF Financials. It's one of my favorite. We were just talking about that one.
Yeah, we were.
Funny. Maybe someone. I know we always ask listeners to send in to us, but I'd really like to fucking know if the overnight rate by the Federal Reserve is increased, meaning it now costs banks more money to borrow money. In turn, they pass on those expenses to the consumer. Therefore, the cash flow and the money should increase. The money coming in should increase for banks. However, we've had massive sell-offs in the financial sectors. Every time rate increase have just been dangled. So she's been beaten up a lot, and banks, we need to start watching their earnings, because that's really going to tell us what's actually going on. So if my theory is wrong for whatever reason, or if my theory is right for whatever reason, then these banks should be going up, especially as earnings come out.
Well, we're in quarter 2 now, so we're in the fourth month. The first quarter is over. Or fourth month, I'm sorry. The first quarter is over, so we'll pay attention to earnings coming up.
The only argument to that I have heard is that people would get out of bank stocks, because if variable interest rates, such as on credit cards and mortgages and stuff, are going to increase, then some consumers are going to start to default. And I think that there's a lot of investors that don't want to stick around for that little small bubble to pop. They'd rather just get out now and go somewhere else. So that could be something that's pulling back the banks. And I could see that. The uncertainty of what would come. So, I don't know. I like XLF. It's not even one I'm watching this week, but it's one I like, Nathan. over the next year to two, I think she pushed to 35. It's going to be a slow mover, but I think it's safe and steady, man.
And that's it.
Sorry, that's my little sidebar about XLF there.
That's it for market news with Nate. By the way, the Spider or SPDR defense ETF is XAR.
I knew it was an X.
Yeah. Well, yeah. So.
Oh,
Yeah. Well.
So Nathan, we first of all, I want to say that was a very nice podcast you did on last Friday.
Thank you. I had fun.
I had the pleasure.
I've got some takeaways, so we're gonna do better on the solo episodes.
Yeah, and then I'm gonna have to do one, when you're unavailable for whatever reason. Maybe I just want to give you the day off.
I don't feel like podcasting.
But no, yeah, you did a great job. I had the pleasure of listening to it on Sunday while I was working, and it was very good. I know I've told you this, but I want it over the airwaves now. I really loved your car analogy.
Cup holders?
No. It was about the you don't buy a car just because it looks good, regardless of the price. You want to look at the price. You want to see why it's that price. What's under the hood? Are you buying the V6? Are you buying the V4 or the 4-cylinder? Is it 4-wheel drive? Is it all-wheel drive? You got to know. You want to know these things. Does it have leather? You got to really get into it. You don't just buy a car because it's pretty.
Yeah, those are the kind of risk you need to assess before getting into the market.
That was a great analogy. Same thing goes with stocks. You don't just buy it because it's been going up. That's just as bad as buying it because it's going down. So good job, Nathan.
Thank you.
Great fucking job.
Appreciate it.
So the past several episodes, we've hit a lot of the big, broad topics that one should really know before they dabble into the market, between the ETFs and exactly what a stock is and the indexes, the downside. And we've touched a little bit of everything, if you will. And there's only one thing we've never really kind of got into, and that's, okay, so you have this knowledge. Where do you actually get started? How do you put in a buy order? What are the different types of buy orders? How do I actually get out? Because if you go to an E-Trade website and you go to sign up, it's fucking confusing if you don't have any exposure to it. So I wanted to fondle that a little bit today.
Well, where did you want to start? Did you want to start with what kind of account you should get?
That is exactly where I would like to start, Nathan.
Nice. Okay.
Because that's going to be your biggest factor.
What do you want to do?
It's exactly. What do you want to do? Most people who are investing have the same exact goal, and that is to make money. That's why you want to do this. You want to put your money to work so that you can use more of it later. So, as a result of that, you need to open an account somewhere, whether it be E-Trade or Schwab or Fidelity or Robinhood, whatever you'd like to use. Now, all those different things, Scottrade, all those different brokers, that really just is on personal preference. They're all, if you want my honest opinion, they're all the fucking same. Except it's basically how much you're paying in commissions and how much power do you have when you're researching.
They've got different user interfaces and stuff.
Yeah, the software is different. Some are a lot user-friendly. I've heard nothing but good things about Thinkorswim at TD Ameritrade. I use E-Trade. E-Trade is very, I like to say it's bulky. It's very blocky. It's not very user-friendly. It's not pretty. It's not pretty to look at, but fuck, if you know how to use it, man, oh, it's beautiful. You can get anything you want at the power of you can get Ukraine's fucking reports on their economics data tomorrow. So you can pull up so much stuff if you want. That's beside the point.
You've said it before. You pay for what you get.
You get exactly what you pay for. But like I said, in my opinion, they're all the fucking same. So find whichever one you like the most. Spend an hour researching the different ones, reading reviews, and see what floats your boat. So you pick your broker. Okay, I'm not going to walk you through that one.
Well,
so
we can talk about that a little bit. When you're finding one that suits you, I mean, you got to look at what are you doing? Are you putting it all into one at one time? Are you going to be making trades? If you're going to be making trades, you might want to think about a cheaper commission. But if you're talking about I'm just doing this for my retirement, you might want to think about maybe a commission-based brokerage. That's fine because you're not doing that many trades.
Mm-hmm.
So if you're doing a lot of trades, maybe think about lower commissions.
It depends how active you want to be in your investing. Do you want to set it and forget it and just buy the S&P every week until you die and retire a millionaire, go for it. If you want to trade triple leveraged stock options and sell covered calls, this is your game. Yeah, so it all depends on what you want to do, or how active you want to be in your investing. It also depends when you're going to need the money. That's another big one. When you're choosing, not only choosing your broker, but picking the account, you got to know when you're going to be able to get that money. If you open a regular cash or margin account through your broker where you can have access to your money at all times, if you sell, you can just go ahead and pull it out. That's going to have serious tax consequences. Tax consequences. It's going to have some tax consequences.
Coin it.
Sorry, man. I think all the medicine's starting to hit me, man.
It's all right. Hey, we'll make a shirt. Tax consequences.
Tax consequences. Gluten-free trading. Watch your tax consequences. So, no, you're going to pay a lot more in taxes, but you're going to have access to that money at all times. But if it's money you don't need until you're 65 years old, you want to open an IRA, something that's tax efficient for you, something that every dollar you make inside that account, you don't pay any capital gains on. So that's your biggest thing. You got to know exactly what that money is for. Sometimes you want it for the next 5 years. Some people want it for 20 years.
Some people want it for the week.
Personally, yeah. It's a savings account for me. If I want to go on vacation, I pull it from my account. For me, and I think you can also agree, I like to have the cash and margin account. And my biggest reason for that is because personally, I'll fucking say it, I'm not in the tax bracket where I need to worry about my capital gains.
Honestly, last year I had a pretty shitty job, or I would say shitty in the fact that I didn't get paid much. And my investment account made less than $100, and I didn't even claim it on my taxes. Like, the reason I say that, and I'll probably claim it on my taxes because I'm making more right now, is I made less than $100, and it will cost me $60 to pay for TurboTax to include it in my taxes to file it. I'm just not doing that.
You'll pay a penalty at the worst.
Yeah, if they kind of tag me on that, then I'll pay the back tax or whatever.
So because I'm in such a low tax bracket and I want to have access to the money at all times, I just have a margin account, both in E-Trade and Robinhood. I don't need an IRA right now. I'm also not making the kind of money where I want to just put away for retirement. I treat my margin account as a savings account and retirement account at the same time. I guess that's a little weird, but everyone has their own taste and whatever their goals are, whatever the fuck they want to do with their own money. Leave me alone. So that's also going to be your biggest factor. Most people who are listening to this show are probably just want to go with a margin account. Like, I hope you're not taking retirement advice, but if you're ready to just do set it and forget it, go with a retirement account. You know what I'm saying?
Well, I think I always think that starting young with your retirement is a great idea, especially with compounding interest. The interest is going to compound yearly.
Yeah, and you don't worry about it now, but when that interest starts to compound and you're making like $10,000 every 3 months off of your investments, imagine now you're paying tax on that $10,000. And if you think about it, most people, that's 25%. So you're really only getting $7,500. So if it's in the right account, it's going to matter. Right now, it doesn't matter for me. When I'm rolling over $10, $20, $30, $40, I don't really give a shit about that. But I know that when I get into a bigger account and it's more geared towards retirement, it's a bigger nest egg, I'm going to have to start looking at some of my tax-deferred options.
Like your student loan payments?
Fuck. Ugh.
The interest?
Yeah. Interest is nuts, man. Don't ever go to college.
God, you got to pay the interest and the loan. What the fuck? I mean,
fucking
of course you got to do that. That's what you signed up for.
But as you pay the loan, the interest amount goes down. If I can quick sidebar, I think you can agree with me, Nathan. And I hope you can. Or if not, you can at least reflect on it.
I'll let you know.
Unless you need to go to college, don't go. If your dream job requires a degree, if you want to be a surgeon, you want to be a pilot, you want to be an astronaut, go to college. Yes, you're going to have to. if you are willing to just grind it out and put money away and not be a consumeristic piece of shit in your life, grind it out in the workforce, learn a trade, master it, and bank the money.
We got two different degrees, and I gotta disagree with that because I learned a lot from my political science degree. Just alone, I had a great time with the experience.
The experience. I had a great time. I went to film school. I loved it. I had a blast in film school, dude. I met great people. I went out and I met tons of new people and got to experience many different things and different perspectives about many different things. And I learned many different perspectives on reality. Like, it taught me a shitload of things, and I will always cherish that. And I never regret to go in college for that. However, I never needed to step foot in film school. Even if I was working in that field right now, I would not have needed to step foot at the University of Central Florida Film School program.
But I feel like going to college. I feel like going to college opens up doors for you. Like, for me, I got an internship. Honestly, I didn't see myself going anywhere, but I would have never gotten that internship if I didn't go to college. But it's a foot in the door. You know, I have that on my resume now as an internship with the congressman.
Mm.
So I mean, agree to disagree, but it's definitely a pain in the ass for that student loan.
But it is, because I graduated with a fucking mortgage payment, Nathan. Fuck. But let me put it this way, though. Let's just say you didn't go to college and you worked at Publix in high school, correct?
I graduated high school and that was my first job, and I worked in college at Publix.
Okay. So let's just say 18 years old, fresh out of high school. You never went away to college. Instead, you stayed 40 hours a week and you moved up. And where would you be now? Almost a decade later.
Oh man, if you would be theoretically, I'd be in some kind of management position.
Exactly. And what kind of salary could that yield?
I mean, like 50 to 60.
Now, that's not a grand sum of money by any means, but at your age, it should be, because had you put away 10% of that into either any sort of a trading account, and you got the average market return of 8 to 12% every year, your nest egg would already be north of $50,000.
Yeah.
Easily. Very simple.
There was also they had that auditing job in Jacksonville. I should have kicked myself in the ass for not putting in more money. I was spending. I was just making stupid money, and I was just spinning it out the butt on just food. I bought an Xbox. I love the Xbox.
Yeah,
Don't get me
you started
wrong.
to live the life.
Yeah.
You started to live a cushy life. You were falling into that kind of trap thing.
Yeah.
But do you agree that if you don't need to, it's okay?
Go to school?
It's okay to not go to school, because there's a lot of people.
What about like trade school?
Exactly. Well, trade school is great. I actually have a personal theory that more millennials need to learn trades, because think of how many people out there that are in our generation that don't know how to fucking put up drywall.
Isn't it
or
too late for
electricians. It is a little late, but if you can master
period.
plumbing, how many millennials are going to clog a toilet and they're going to be like, I don't know what the fuck to do? You get to answer the phone, and just by answering, charge them $80, $100 right there. Come unclog their toilet. Because most people don't know what they're doing. You could show up for the service
call, get paid for plunging the toilet just for the service call.
Exactly.
Or like HVACs, for like turning on your AC, they charge you so much money just for the service call.
Yeah. Yeah, and there's so many people out there, Nathan, that make stupid fucking calls like that. Like, I don't know how to do this. Well, did you turn on your AC? No. Okay, well, I have to charge you $75. Here you go. And there's so many people out there, in our generation especially, that think they need to go to college and they get these psychology degrees and they get these event planning degrees and all this other bullshit that they can't get real fucking jobs in. So they end up being waitresses or having to work up their fucking corporate ladder by selling insurance or some other bullshit.
Medical recruiter? That's what I saw.
Yeah, exactly, dude. And they don't know a thing about the real world. They don't know a thing about how houses are built. They don't know how to change the oil in their cars. So these less glamorous, kind of shitty trade jobs, I think, are going to do way better in the future. because there's going to be a higher demand of them because they're dying off. These people are plumbers now, and our AC workers now are dying off. They're older people. You don't see any 19-year-olds out there starting their own air conditioning companies.
We should start one.
We should fucking start one, man. Fuck. But do you get what I'm saying? That's my little rant right there. But
so if you don't go to school.
I don't think you need to. I think that there's a negative stigma that everyone needs to go to college and get a degree and then work up the corporate ladder.
And it's not that fucking hard. Though. You learn so much on skills and stuff.
I feel like you learn more about yourself and you learn more about human society than you do in actual school. And I will always cherish that education. I feel like that experience molded me into who I am, from paying rent and bills and working 40 hours a week in addition to going to class and staying up all night drinking and going out and blowing my paycheck. Yeah, I had a blast. I learned so much, and I would give anything to go back. But if I could go back, I would just go back and I would find whatever job I enjoyed when I was 18, and I would just stack money into one of these accounts. Let's go back to the account thing because we drifted there. Holy shit.
Yeah, man. Welcome to that digression cast.
It's great. It's great. Taxequences, man. Fuck. This is a CJ Couch Talk. This is a Crystal Springs water break. Anyway, that's my little side rant. So, these accounts, yeah. So you figure out what account you want, and then it goes right back to the kind of investor that you are.
Why don't you go ahead? I know you might have said it. Why don't you go ahead and retouch on what different types of accounts are and what investor would like it? I mean, I know we kind of mentioned it in the beginning, but
there's various types. We're going to talk more about margin and trading more trading geared accounts in this podcast and this series as a whole. Giggity. I said whole. Got him. But there are various different types of account. There are various types of accounts from tax-deferred retirement accounts. There's college savings accounts. There's, like we said, the margin and trading cash accounts. There's 403B accounts. There's 401k accounts. There's your standard like mutual fund account where it's not even a full account that you can buy anything except one item.
What about this? What would you consider this? An investment club? Do you consider that kind of an account?
What do you mean, an investment club?
Well, I mean, of course you're going to have an account somewhere. Someone's got to have an account for the club, but I feel like that's just its own different type of account. I don't know.
I have no idea what you're talking about, bro.
You don't know what an investment club is?
I mean, I've heard of investment clubs. I don't get what you're talking about, how that pertains to an account. Oh, you're talking to, like, if you're part of an investment club that uses one account, like a web kind of thing.
Exactly.
Like, everyone has a separate account that's under one account.
Yep.
Yeah. But I feel like those accounts themselves would be like margin accounts or trading accounts. Okay. There's complex shit. Out there. There's like E-Trade can like set up a hedge fund for you and me where we have certain accounts and we can open accounts under shit, but we control the accounts, and that gets crazy. It's wild.
Yeah.
It gets confusing, but there's ways you can just like Facebook, you can go in, open an account. There's ways like on E-Trade and Robinhood, you can go in, open an account. You want to do margin. And most of them, as you're signing up, are asking you these types of questions. What is this account for? What are you doing? How much experience do you have? That kind of stuff. But 9 times out of 10, your goal is either going to be the simple IRA, Roth IRA, or margin account, depending on whether you want the money now or you want to build that nest egg for the future in your retirement. I'm doing a little bit of both until I have.
You should.
I'm
a very strong supporter of starting your retirement early.
Mm-hmm.
All right.
So you figured out what account you want, Nate. You figured it out. You decided you don't want to go to college. You want to open an account.
And you said, take your graduation money and then put it into an account. I got it.
Yeah. So, Figure out what a type, and then it goes right back to your episode last week. It goes back to the risk, and it goes back to, once again, the type of investor that you are. Personally, I'm a risk taker. I like to pick out single stocks here and there. I'll allocate 10 to 20% of my portfolio at any time, and I like to do that. That's how I am, and that's what I prefer to do.
Side note, you should take more risk when you're younger because you have more time to bounce back.
Exactly. I'm also taking the risk now because, if I lose $500 here, that really doesn't mean anything. Granted, I still would be pissed if I lost it. I'm going to do everything in my power not to lose it.
Yeah, but it's not going to be a huge deciding factor for you.
Exactly.
And you won't need that in 10 years.
Exactly. So it goes back right back to the type of investor that you want to be. Are you going to pick out funds? Are you going to pick out individual stocks? Nathan, if I'm not mistaken, I like to take bigger stabs at one time, and you like to kind of spread out more.
Oh yeah.
So kind of touch on that a little bit.
What do you mean by spreading out? You mean like allocating differently?
Yeah, you allocate a lot differently. Like I think I'm a little bit more risky of an investor.
Well, okay, so if I'm not mistaken, if we're going to use examples here, you're pretty heavy into PEY.
Mm-hmm. That is my favorite ETF.
And for me, I'm not really heavy anywhere. I spread that bitch out because, that's less risk for me. Mm-hmm. If it's in one stock and it tanks, that's a pretty risky investment. But if I have it all over the place and the average tanks, it's not that bad. My portfolio goes down, it's not going to go down just because that one stock went down. It's going to go down because the whole thing went down, but it's not going to go down as much as one stock would go down, let's just say.
Now, PEY holds over 50 different stocks, so who has more diversification here?
Well, if you want to go into technicals, I think I do because I own more ETFs, but...
Oh, that's true. You own several ETFs. That's true.
But... that's one of the good things about ETFs and mutual funds is because they have those averages inside of them. But let's say, for example, we had Trader A who is who heard about Tesla and put his let's say $10,000 into Tesla. It's a pretty risky investment. Let's just say it goes up. Great, you did well. You picked that stock and it went up. But Tesla's automatic cars kills 2 people, and all you need is that one article, man. All you need is that one article, and then your whole portfolio goes down. But let's just say you want some riskier stocks and some growth stocks, and you put one share of Tesla in, and then you have, let's say, Ford, GM, maybe a Toyota ADR or something like that in there as well, and you get that headline. Tesla automatic car kills 2 people in automatic testing. Tesla's going to go down, but the rest of your portfolio is going to kind of even it out.
Mm-hmm. Because you have that diversification. You have that you want to get a nice, even basket of things.
I think there's some experts out there that recommend your portfolio not containing more than 10% of one stock.
Mm-hmm.
Or one asset.
Yeah, the rule is you want 25 to 30 stocks.
If you can afford it.
If you can afford it. See, that's a lot. See, for me and my small portfolio have an ass, I can't do that.
I wonder how many I have. I haven't really counted.
Before we go forward, let's dial back just a little bit. So once you've identified the type of investor that you want to be, you've also got to set up your investing plan. This is now your baby. You can have it. You can be as involved as you want, but you've also got to understand. You've got to watch this. You've got to monitor it just a little bit. So if you're one time moving $10,000 into an account and then you want to allocate it, that's much different than someone like me who puts in $30 to $50 every week into my account and just slowly purchases assets as I build up my cash position.
Personal risk.
And it's also different goals. Some people just have money that they need to move and park. I get that. Luckily, or unfortunately, I'm not there. I wish I had that problem.
We said that before. You always set your goals before you set out on your plan.
So set your goal. Now, personally, my biggest recommendation is if you're not a risk taker, your best bet would be to start with a fund. If you want to be simple, go S&P 500, maybe even the Dow or the QQQ. If you're feeling spicy, go with an index.
Well, how do you feel about recommending mutual funds?
Well, mutual funds I feel much different about.
Why?
I
For the average investor who's scared of putting their own money in, why do you feel like mutual funds is a bad idea?
Because mutual funds charge or tend to charge a lot of fees, whether it's upfront or on the back when you go to cash out, or if it's yearly, they just take it out. They charge a lot of fees because they have a lot of people that they got to pay. They have traders, they have investment analysts, they have fund managers, and then there's like 3 or 4 assistant fund managers. They're paying like these people hundreds of $1,000s, and you got to pay their bills.
Yeah, but that's exactly like what you get. You pay for what you get.
You get what you pay for. Now
You're not getting a trading expert when you trade yourself.
That's true. Yeah, you are getting quote unquote. We're going to put that in quotes, Nathan. Ugh. We have quote unquote investment experts who wear these expensive suits and go to work and have all these glass office buildings and shit in downtown New York.
Mahogany desk, cherry wood desk.
Mahogany desk, smoking cigars. No, yeah, you do. You do get that, and you get the safety and security of that. And to be honest, some of them are pretty damn good. No one can time the market perfectly, but they can set up investment strategies that are way beyond our power, knowledge, and capabilities because of capital. They are able to take large positions and adjust their portfolio quickly as needed in order to achieve the goal at hand, whether it's to preserve the money or grow the money in whichever fashion that mutual fund wishes to achieve.
I don't really know how to get started with a mutual fund, if I'm going to be completely honest.
You either go directly to the broker house, like Vanguard is the most popular one. I'll use them as an example. You either go to
use Oppenheimer.
There you go. So you go to Oppenheimer, you contact their office, or go to their website. You can either do it directly through there, or you can go through a more powerful broker such as E-Trade or TD Ameritrade, Scottrade. And you can just put in the symbol right there, and most brokers can get you shares of those mutual fund in your personal account. So the reason that
good to know.
Yeah. So the personal reason that I don't like them is because of those funds or those fees. I'm sorry. Yeah, the fees. They can tend to be very expensive, and that takes a toll on your account. They'll send you this pretty little prospectus of if you put in 5,000 now, and then in 10 years, and then in 20 years, and then in 50 years, if you invest a dividend, blah, blah, blah. They don't show you that over the course of those 50 years, that graph also goes up in your price, and you pay them close to maybe $30, $40, $60, $125,000 over the course of having your money there. That shit compounds. Remember, as you're making money, those fees compound as well. Remember that shit.
I've read that you can deduct those fees.
You can deduct those fees, yeah, but you're not getting that money back.
Put you in a different bracket.
You're still not getting it back. Now, if you do the same exact thing, the advantage of a mutual fund is because you get a nice basket of a bunch of different stocks that you don't have to pick. That's exactly what a fucking ETF is. If you can at least guess where you want to be, if you want to be broad in the market, or if you want to be something that's dividend focused, or you want to be something that is non-cyclical like utilities, or if you want to be aggressive with a single blue chip company like Disney, you have those options and you manage it yourself, and you don't have to worry about those expensive fees. Yes, ETFs have fees, but they're often always less than a half point or 1/2% annually or quarterly. It's such a small fraction of the number that you see the price get taken. You don't even see the price get taken out because you just think it's just trading normally. You almost don't even see it. And I think the SPY is like 0.15. It's so cheap compared to paying 3% annually on a mutual fund. Are you kidding me?
Mm-hmm.
So, and you're still getting that huge basket of stocks. If you go straight to the S&P, you're getting 500 companies. You're staying with the market. You're getting the dividends. You buy in the down, you buy in the up. You stay with it, and over time, just that compounding will grow that account so drastically. It's fucking mind blowing. But so once you've identified the risk that you want to take, whether it is just buy the S&P or a dividend-focused fund, my personal PEY, I'm going to plug it real quick. if you want to do something dividend focused, utilities focused, real estate focused, or if you just want to own the entire market, purchasing that on a steady weekly, monthly basis and staying with that will slowly start to build your account. And that can be a perfect way to be in the market and also grow your capital so that eventually you can build that to $15,000 or $20,000, which you can then spread out around 20, 30 stocks. So it might not be easy to spread out and diversify a nice, wide, well-balanced portfolio with
small portfolio,
small funds. Yeah. Sorry, I was watching my dog. What the hell is she doing? When you have $1,000, you can't get a nice, well-balanced portfolio. But once you have that $10,000, $20,000, you have the ability to diversify over various funds and various stocks that you get to handpick at that point, and it gives you a chance to stay in the market. So that's personally what I'm doing at the moment. I've kind of pulled back from trading until the market's kind of calmed down and we see where it's headed. I'm staying ETF focused.
It's going up. We're hitting double bottom on the Dow Jones. Sorry.
I hope so, because my ETFs will still stay with the market. I'll still get the gains, but I'm dialing back from trading just for a little bit, and I'm staying focused, depositing and purchasing and reinvesting those monthly dividends. That's my plan right now.
Okay, so I have my account.
You do.
I have my account. I have opened my account.
You have.
Let me buy my stock. Where do I go now?
Okay, so the next step, basically, you've put in the money. You say, okay, I'm ready to play. If you know exactly what you want to do, you're ready to go. Let's say, okay, I've put in my first $500. I'm going to get 2 shares of the Dow. Nathan, I'm ready to do it. I'm ready to start my retirement, and that's where I want to park it first. I'm going to ask you.
You're asking me after I asked you? What the hell?
I want to ask you. I feel like I've been talking a lot. My throat's still fucking killing me.
Okay, well, let's see. If I'm going to buy a share of a stock, and you want me to buy the Dow Jones 500, Dow Jones 300, Dow Jones 30?
Dow Jones 300.
500.
Super Dow.
It's a NASCAR race.
Dow 300. Brought to you by Sprint.
So I would say you would go to whatever broker page. Let's say you're doing this online brokerage. You go to your online broker page. You type it up in your search bar, and there will be a buy. Let me do for example. So I'm just not talking out of the whim here. So
out of the whim.
Actual example. There'll be a little section that'll say buy. I suppose if you had actual shares. Let me do a stock that I own.
Start with a buy, man.
Okay, so they have buy options and they have sell options. You could
start with a buy. Remember, I just put in my money. I want to buy the Dow, man. What do I do?
You want to buy it. So you click on your buy. You would click buy. You would click on the buy because you don't want to sell because you don't have any. You would type in how many shares you want. So you would want, let's say, 2 shares.
I put in 500 so I can get 2 shares.
And now you have an option here. You can buy it right now at the market price of whatever you buy it just immediately, or they have what's called a limit order, which you can set what the minimum amount of money you want to pay for that stock is. They have what's called an ask bid spread. Kind of really explain that. Like I can kind of give you an idea of like what for me it is. It's the lower amount someone's willing to pay for, and then the higher amount someone's willing to sell it for.
I have a good way of putting it.
Let's hear it.
You ready?
Yeah.
All right, Nathan. You want to sell me your car? I say it's worth $10,000, and you say it's worth $20,000.
That's an ask bid.
Okay, so I'm bidding $10,000. You're asking for $20,000 though. For us to have a sell, for something to happen here, for me to sign the fucking papers and get that bitch, it was aggressive. Wow.
No, you're getting that bitch.
I'm getting it, dude. I want that Jeep. You got a Jeep, and I like it. For me to get it, we have to make a deal, right? You need the money. You got to pay for your diabetes medicine, and I need it for my Uber job. Mm-hmm. None of that's true.
Yeah.
So in order to make a deal, we got to meet somewhere. So I might say, okay, so the market, the middle, that instant price is going to be 15,000. That's the middle. That's the exact even price. We have to battle over whether or not we want to execute that. If we never decide, then that car is not going to move. There's going to be no value there.
Yeah, it's a really weird example because there's not much liquidity in two people.
Yeah.
But in like the market, there's tons of orders being tossed around, especially in like a Dow Jones, the Dow Jones fund, the DIA.
Mm-hmm. But that's exactly what it is. It's you're bidding. I'm bidding for 10,000. You're asking for 20. We got to meet in the middle.
Yeah.
So a market order, and now if you translate that into the stock market, I have this amount of Facebook. I want to sell. I want to buy it at 150, and you want to sell it at 151. We have to meet in the middle for it to happen. 9 times out of 10, there will be a deal. The brokers it'll cha-ching, sign the papers.
I thought market orders were basically the last price.
They're usually the last price. When you hit the market order, you instantly hit the ask.
Okay.
So if I want it right this second, go to the ask. Give it to me. 151 sold. Think of the auction. Blah, 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 blah. I have 151, 151 sold. The gentleman ran on the red. Do I see 151, 151, 50, 50, 50, 50, 50,
if it's not selling, you're going down a bit.
Exactly.
Okay. So yeah, so you have your limit order, and for your limit order, you don't like it has an ask bid spread on it, and you can usually, if I kind of want the stock today, I'll usually kind of set it at the bid, the lower price.
Mm-hmm.
But like if I'm gonna kind of play it a bit, and then I'll set a lower price limit, and then it'll go down. Sometimes it'll go down and it'll hit, and sometimes it'll go up. I'm like, shit, I need to put a freaking higher limit order. Yeah,
sometimes that's the worst part of a limit order. Okay, so the best way to put a limit order is, let's say Ford, just making it simple, is at $10. Let's say it's there. Of course, there's normal market gyrations, so you can put in an order, and the bid spread might be like $9.95 and $10.08. So you put in a market order, you might get $10.08 right then and there just to buy your. But let's say you don't want to pay anything over $10. You can put in that limit order for the exact price that you want to pay, and once a deal is able to be met at that price, they will sell it for you right then and there, or buy it for you right then and there. So it's a great way to control the exact price that you want. You don't want any more. You don't want to pay any more than $10 to get that stock. That's what that order is. The market is, get it for me now. I want it right now.
Okay, so as soon as you decide, go ahead.
Okay, you said you use limit orders. I honestly, every time a new cash position opens up for me, whether it's through a deposit or one of my other positions sold off, I put in a market order to add on to my PEY, or to add to my ETF.
That makes me sick. Why would you ever do
that? But I just want it right then and there because I'm not trying to time it. I don't want to put in the limit order. I don't want to miss out. I'm just going to buy it now. Just give it to me now. I don't want to think about it.
You don't play the technicals on the week or anything?
Now, when I'm trading, I do. When I'm trading, I absolutely do. I always watch my watch list. I have a list of about 20 things that I watch, and if I see large dips, that's when I'll start to gain interest in trying to get the pop up. Like, for example, I've been watching MGM. She had a run up to like $36, $37. Yeah. And then she came plummeting back down and then kind of wanted to go back near, and then took a beating today back down like near the 32s, high 32 area. So she's struggling a little bit, but yeah, I'll trade off of that.
Yeah. So once you decide that what kind of order you want, if you want the price now, if you want the stock now, go ahead and do a market order. If you want your price, go ahead and do a limit order. For Robinhood, it lets you review.
Yeah, you can always review before you submit it.
Yeah, which is nice. It doesn't buy it automatically, like, oh crap, I gotta sell it now. But you do that, you review it, and then you click buy, and then the stock is yours. You are now an owner of the stock, the owner of that company. And
then the sell order is the same thing the other way. Let's say the Ford is at $10.50 and you want out. You say, I will sell it at $10.50. You put in that limit order, you'll get it there. If you put in a sell, you're going to get whatever it's going for at that exact price.
Yeah, so,
or not that exact price, that current price. Be careful. Be careful with market orders on a illiquid stock. Holy shit.
Yeah. There's times where like I've bought like a market order and like automatically lose money.
Yeah. Oh yeah. They're like, okay, it's at 1908. You put in that market order at 8. You bought at 1914. You're like, what? So that's basically it. That's just the easiest way to get started. I guess your biggest worry there, you kind of got to watch commissions. If you're buying 2 shares at a time, you might want to build up a cash position.
What's
if you're
a
not
cash
paying
position?
any cash position is basically basically just putting money into your account and not putting it anywhere. You build up $1,000, $2,000, and then you move it in big chunks at a time. That way, you're not paying out the ass in commissions.
I like to have a cash position because I like to refer to a thing called capital lock, and then when there's an opportunity, you have that cash to kind of buy it. You know what I mean?
Mm-hmm. Hey, you always want to have cash on the sidelines in order to capture, like, there's been so many times where I wanted to buy everything's doing so well, but I wanted to buy this at this, and now it's finally at a good price, and I can't buy it unless I sell something else. You don't want to be all in all the time. Having a little cash on the sideline keeps you open for opportunities. And personally, I think it also gives you the opportunity to manage a current trade.
It also reduces your risk in the market.
It does, because you're not going to, if the stock market went to zero tomorrow,
your cash
and you lost everything. Your cash did not. I'm sure. I mean, your value of the U.S. dollar might have, but that's a different story. But you still have that $100 in there.
Yeah. But yeah, I think that's about it, right?
Yeah, that's basically the simplest way to just kind of like get in there. You pick your so just to quickly review. I mean, we've rambled. We went on the sidelines.
It was crazy. We'll have to retouch this at some time.
Yeah, this was fun. But just to get a general idea of everything that it was, you find which broker platform you want to use, if you want to use a platform at all, or you call up Fidelity and you open a mutual fund account. You set up a plan. Are you going to deposit weekly, monthly, yearly? Is this your IRA? Is this trading money?
Do you want it now? Do you want to let it cook?
You want it now? Do you want it later? You got to find out what's best for you and your current situation in life. So once you identify that, you want to figure out, you want to find out what you want to do. If you want to pick a stock, you want to start picking stocks. If you want to find an ETF or something that you can just kind of grow and build a nice steady position in over the course of time, and kind of do like a dividend reinvestment thing, which is one of my personal favorite investment strategies. And once you do that, the key takeaway is you want to go for a limit order. Put in whatever stock or fund it is you want to do. Once you've done your market research on episode 3, once you've done your market research and you find exactly what it is that you want and the goal that you're trying to achieve, and you say, okay, this is it. This is what I'm trying to do. You go in, you put in that limit order, identify the right price for you, and you put it in your account. And bada bing, bada boom. That's all there is. That's really all there is to it.
Sounds like a podcast to me.
Sounds like one to me. What are you watching for the rest of the week?
What am I watching? I am watching I've been watching a lot of Dow Jones companies. I'm watching ExxonMobil, ticker symbol XOM. This Monday, I bought a contract around 64 cents a contract, totaling about $64 a contract, and it popped up to $1.09 a contract, and I sold that bit right away. But I did also put in a long position. I bought a hearty old share of ExxonMobil, so I'll be watching that for a while and the next week. What are you watching, gluten-free Jason Bessing?
I think I am watching. I think I'm gonna refer back to MGM.
I thought you had one besides MGM.
I did. What was it?
Oh, don't make
I told you one. I know. I told you one. I was like, oh yeah, here's a hint. I put in there earlier, but after the market. Oh, was it Carnival? No. That was one I wanted to talk about real quick. Carnival took a nice shit. Did you see that 4% yesterday?
I don't watch cruise lines, so I'm going to be completely
Came back up 2%. It wasn't bad.
Let me see if I can
Yeah,
find
but
what you were talking
man, I
about.
don't remember which one it was.
Hold on, let me type it in. Okay, we can continue.
But yeah, I like MGM.
Sure.
She dropped down a little bit. Let me get the exact number here. She dropped down like nasty, like 2.5%. She's in the high 32 range after being at the 36 area.
You know, maybe I'll save this
33.80. She stopped at. She went down to 30. Yeah. Yeah, she went down to 33.60 today and just finished at 33.80, and she just keeps going down 4% for the week, 8% for the month.
Maybe I'll save this for Friday as my watch list, and I'll bring it back up. But I'm going to also put in Facebook. We need to be watching Congress and what they decide to do on the Facebook thing that's going on right now. Like right now, people are liking what Zuckerberg's saying, but in the end, who has the final say? Congress. They're the ones who put down regulations on these types of contemporary issues.
Mm-hmm.
So Facebook is another one I'm going to be watching. I might bring it up Friday. I'm not sure.
Yeah, Facebook is just something everybody should be watching. Just watch it. I say don't play it.
Yeah.
But it's gonna be it's gonna affect the market a lot, no matter what it does. Yeah. It's gonna move the market. It's especially the QQQ technology sector.
NASDAQ.
It's going to, it's going to be nasty.
All right, well,
if it's nasty, but remember, it can go the other way. If everything checks out and Zuckerberg gets a slap on the wrist, which will probably happen because he's a lobbyist and probably is paying half these assholes paychecks.
Yeah, NASDAQ was the winner today, so.
Yeah, remember, it can go the other way. If Facebook pops up another 6-7% tomorrow, you can expect a 1,000-point Dow rally. I fucking guarantee that, bad boy. I can guarantee that, bad boy. Do you think if Facebook popped up 7% tomorrow, you think we can get a 700-point move on the Dow?
I think if anything big like that moves up 7%, it's a good day in the market.
That's a great day. It's going to pull up everything because its market cap is huge. Think of all the ETFs that, it's great. It's like $500 billion.
Yeah, there's this weird kind of like movement that happens with the market, and it moves together. It's a herd mentality.
Mm-hmm. Oh, yeah. Other things go up.
Yeah.
Well, it brings up buyer sentiment. It really does.
Mm-hmm. All right, well, let's close this up. It was a good podcast on getting started.
It was great.
Listen,
I'm sorry I was sick.
Yeah, we just started a Facebook page. Check us out on Facebook, Rebel Trading, Facebook.com/Rebel Trading Group. Check us out. Send us an email, rebeltradinggroup@gmail.com. That's 2 G's, rebeltradinggroup@gmail.com. Any last words of wisdom, Jason?
Be careful out there, folks. We're still volatile. We are still in a volatile phase here. Watch. I'm definitely saying watch the QQQs and the big techs out there. But other than that, we'll see you on Friday, baby.